Welcome to the LiveSquawk podcast, where professional traders, investors, and market insiders get the unfiltered insights that matter most. Stay ahead of the curve with expert interviews and exclusive market commentary. Hello, and welcome to LiveSquawk's Market Talk. It's our preview show on Thursday, the 11th of June, 2026. Today's episode previews the impending European Central Bank interest rate decision this afternoon. In the case of the ECB, the announcement comes at 13:15 GMT, 14:15 CET, with the press conference set for 30 minutes later at 13:45 GMT, 14:45 CET. To help me break down the expectations and for the central bank, I'll be joined today by Eric Culp, LiveSquawk's European editor, and Carsten Brzeski, global head of macro at ING Research. And I'm very, very happy that he's joining us today. A quick bit of background on Carsten. As I said, he's the global head of macro for ING Research. Previously worked at ABN AMRO, the Dutch Ministry of Finance and the European Commission. He's a 2019 JFK Memorial Policy Fellow at Harvard University and a member of the Advisory Council on International Affairs for the Dutch government and Parliament. Carsten has studied at the Free University of Berlin, Northeastern University in Boston, and Harvard University in Cambridge, USA. So already I feel immensely dumber than I did before. I read all that out. But we'll come to Carsten in a minute. But as usual, just a quick disclaimer. The content provided on this channel is for informational and educational purposes only. We're not licensed financial advisors, and none of the information shared should be considered as financial investment or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We're not responsible for any losses or gains that may result from following the content on this channel. So for most this year, since the start of the Middle East crisis, then G7 central bankers, amongst others, have been in a wait-and-see mode, really, in terms of monetary policy. However, it's widely expected that the European Central Bank will break with this convention and lift borrowing costs later today. To set up the scene, really, I want to bring in Eric, our European editor. Eric, your preview's up on our website. We'll send out the links afterwards. But what is today all about, and what are we expecting?
Yeah, Harry, thanks. Good to be here. Analysts widely expect the ECB's governing council to raise key rates by 25 basis points today, which would take the benchmark deposit to 2.25%. Rates have been unchanged since June of last year, and a hike would be the first since September of 2023. On top of that, we're expecting new stat projections. I think, well, the ECB watchers generally think there's going to be higher inflation forecasts, and there's probably going to be lower economic growth forecasts too. The situation, it's not good. Inflation jumped to 3.2% last month, according to preliminary information out of Brussels, and it's a tough go for everybody right
now. Yeah, undoubtedly. Carsten, I'm reading up on your latest piece. You've actually put out a piece, I think, earlier today, where your bank has changed forecasts, as you put it, amid dire geopolitical backdrop. I'll let you sort of spring that on us. But what are your views now on the ECB, not only for today, but down the line as well?
Yeah, correct. Well, let's start with the ECB. And indeed, today I think, is a no-brainer. 25 basis points rate hike. And afterwards, or beyond that, I think we've changed slightly our view. Up to now, or up to yesterday, actually, I thought, well, it's going to be a one-and-done rate hike, because there is no real need for the ECB to go beyond 25 basis points, beyond the symbolic rate hike story. Because in the end, we all know that a central bank cannot end wars, and a central bank cannot bring down oil prices. Only problem for the ECB is we've been here in 2022, and back then the ECB had been, hammering on this word transitory, and in the end turned out to be far too late and a lot of be behind the curve. So this is why I think now also that they will probably do a second hike over the summer. has to do with the changes to our own base case assumptions. So we now expect really that oil prices will go up again in the over the summer, before then ending in some kind of resolution of the Strait of Hormuz. And against this background, the ECB will feel inclined to do at least a second rate hike. In all honesty, Harry, if they go beyond 2 rate hikes, that would be a big policy mistake, because not only they won't be able to bring down oil prices, it's also that the state of the European economy is pretty dire, and that if they really go beyond a second rate hike, it means adverse effects on growth, and I cannot see the ECB going that way.
So, is this all about managing expectations? Then is this simply about making sure people understand that the central bank itself is fully aware of the potential risks? But I've asked this question of other economists, other traders before. Is this one hike a mistake? But as I said, you've now gone for 2 hikes. Could you see a reversal of this if this war does end in the next few weeks?
Yeah, well, if it would end actually in the next few weeks, I think we could get rid of the second rate hike. In all honesty, so I think in order to see the second rate hike, we would need the war to continue a little bit longer, at least until mid-July. The problem is always what is a policy mistake, and the thing with the EC, or put it differently, do you remember Ellen Blinder? Eric does probably. Ellen Blinder was I think the vice chairman of the Fed in the 90s, and he back then said, and I think he even had a paper out there saying that, conducting monetary policy is at least or as much of an art than it is a science. And I think that this brings us down. 25 basis point rate hike won't make a difference. This is not what will bring down inflation expectations. This is not Eric and you all of a sudden completely having different thoughts on where inflation will be going to over the next couple of months. So that's nonsense. It's also 25 basis points will also not make a difference in Europe between flourishing growth numbers and recession. 25 basis points is symbolic, is reputational, is sending a message to financial markets. If they go beyond, and at some point, if you do 50 basis point rate hikes, 75 basis point rate hike, this is where it starts to hurt the economy. And I cannot see the ECB going there. So they want to be symbolic. They want to support their own reputation. They want to show markets, hey, come on, we've learned our lessons from 2022. But I cannot see that the ECB would be willing really to risk a recession in the Eurozone economy by reacting to what's called an exogenous shock.
Yeah, I think that's Eric here. I think that's a really good description of the situation. I mean, to me, you say symbolic. It's more like, hey, guess what, guys? We're paying attention. Look, we know what's going on. We've been watching the markets yet, and now's the time. I'm seeing stuff from some analysts saying they're equating this to 2011, right? And I'm thinking, is it really what you think, or do you just have to write a report today?
I mean,
Oh, come on, Eric! I also have to mention the 2011. So of course, we all have to we have to write reports.
Sure.
but
policy mistake, or was it the right idea at the time? That's the thing.
No, but I think, and make a distinction. Here is an upcoming report from an ING economist. I'll give you a hat tip. One rate hike is not a policy mistake. Let's be very clear. And one rate hike is also not a repetition of 2011. I think I'm fully with. I understand where the ECB is coming from, and listen, it won't do any harm. That's the insurance rate hike. But if they were to go really clearly beyond. And I think even the second rate hike, we could still label it as reputational. But if they go beyond that, then we are indeed, or we're risking to get into this 2011 scenario. You know, because for everyone listening who's not aware of what 2011 was, 2011 was the Eurozone had just come out of the first phase of the Euro sovereign crisis. You know, people thought, oh, it's going to be over. Then we had a bit of an energy price uptick, led to higher inflation, and then the ECB under Jean-Claude Trichet decided, oh, let's go for rate hikes. Only to find out a few months later that the sovereign debt crisis was not over. The Eurozone was facing a kind of deflationary shock, and the ECB had to reverse these rate hikes when Mario Draghi came into office. And I think the risk, obviously, with the ECB going beyond one or two rate hikes, the risk of a repetition of 2011 clearly increases.
I'm talking about looking at reputation. Should they have to reverse this? Is that not more of a credibility and a reputational problem for the ECB? You know, they've been labelled as slow, like we've just discussed, slow to react in the past. There's also, I'm asking this as a double question. There's a bit of scar tissue, obviously, amongst central bankers generally, that this word transitory was taken too liberally at the time. And this is more about trying to correct that mistake at the time, as opposed to anything meaningful today. And again, from a credibility perspective, shouldn't you play the hand you're given and just see how things fall? I mean, the second round effects and what we're maybe starting to see, but didn't we get some yesterday with the US CPI? Did we not get a view of where economies are really going at the moment?
Yeah, I think we are. Um, you know, the problem when we make this comparison with 2022, you know, don't forget, Harry, that back then, you know, before the ECB started hiking rates, headline inflation was at 8%. Yeah? So the term transitory was stretched quite a bit.
Yeah.
Yeah. Even worse, you know, the policy rate back then was at minus 0.5%. So there you had an ECB looking at headline inflation going to above 2%, going to 8%, and still sticking to minus 0% policy rate. So something was wrong about that. You know, a very good communicator could also explain why, you know, the current situation is pretty different. But you're right. But the ECB, well, doesn't want to go into this communication story, so they think, hey, come on, we're now the first major central bank. Look at us, we're the first major central bank actually reacting to this new energy price shock. So look at us, and of course, the hope then would be that by coming out early now, they don't have to do more later on. And I think, you know, if there was any reversal further down the road, would they really give a damn? I don't think so. And I think you could also explain and say, come on, we did this first move in order to preempt second round, third round effects. And hey, we were successful. So, you know, we could easily then reverse. If the facts change, the ECB could also change their mind. And let's also not forget a final point here. You know, the ECB itself sees the neutral level of interest rates in the eurozone somewhere between 1.5 and 2%. So bringing the policy rate to 2.25% does not mean that monetary policy is all of a sudden overly restrictive. We're still at the upper bound of a neutral interest rate.
I think those are really good points. If I may, one, if they had to take a U-turn, I mean, that's really easy for them to say, well, this falls under our current strategy, right? We're nimble and we react to the market, and look what happened. And then we made that change, and, you know, we did what we're supposed to do and what we've been telling people the whole time. I think they could probably get away with that once. On the other hand, I mean, sure, they're taking the lead this time. They kind of took the lead on rate cuts too. Yeah, the SNB beat them a little bit, but the ECB was right there, bang, to knock rates down. So y- I think, yeah, I think they're happy that they're up front this time.
Okay, fair point. So the messaging then, let's get on to what President Lagarde might say in the press conference. I've read elsewhere that she might be non-committal and obviously she won't preview another cut should there be one. But in your chart here, the ING do a useful chart every ECB decision that gives you just differing scenarios, and I've seen it's been circled hawkish, ING base case at the moment, and obviously it's probably even more hawkish now that you say you change your um, your rate hiking forecast. Um, do you think she'll hint in any way, shape, or form, or like you say, she'll want to just, like Eric said, to stay nimble and to leave the door open, or just be completely neutral and just say, look, we did this because we needed to do it at the time. We'll look at the next situation as and when that comes up, as all
Yeah, I think the latter part of what you just said is probably how she will be sent into the press conference. It's not necessarily how the press conference will end. And I think that is important because to understand what's happening. So of course, now the governing council takes a decision. The governing council then also has a long discussion on the framing, on the communication, and this is how Christine Lagarde will enter then the press conference. So we have the introductory statement, which is written up front. So that's an easy one. And then we get normally a repetition at the first and second question. And then the big question mark is, and I think in this communication, it will be pretty non-committal. So it will be, well, we stand ready to act. We will have this meeting by meeting decision. So all these kind of words that don't say anything at all, because it's part of a normal central banker vocabulary. Like, we are data dependent. Of course, gosh, every central bank should be data dependent, every single meeting. But we will get a couple of these mantras. And she will clearly say, so ECB stands ready to act, but they don't want to overdo it. So it's something along these lines. And if the official communication would be different, I indeed and also the markets will react. Yeah, so, well, what are the potential options? Option one would be, the ECB intends to do more. Well, clearly, gosh, this is high alert for hawkishness. Or or Lagarde would say, well, with this, we feel extremely comfortable after this one rate hike and don't see a necessity to do more. Clearly, on the dovish meter, high alert. But then we get, when we in the course of these Q&As, I think this is where we all have to pay close attention to, because this is, well, first of all, will she say whether the decision was taken unanimously? Will she say whether there might have been some ECB members actually opting for a stay on hold, which could also be more dovish? Were there people actually in favor of a 50 basis points rate hike? Yeah. So it is these between the lines comments that are, of course, of most interest. Plus, then it will also always depend a little bit on the journalists attending the press conference, whether they are able and to push through a little bit. Because I would also be interested to see whether there are any additional kind of choke or turning points for the ECB. So when would the ECB really be on high alert, or, as we learned in the past, highly vigilant? And when should we expect the ECB to really become even more aggressive in terms of rate hikes? So that is something that a very good journalist like you guys might be able to ask you in the press conference.
Well, we were very much, that was my question to Eric. What would you be asking Lagarde, given the opportunity? You've been in this situation, I've been in this situation, been in the room under Draghi, whatever. My personally, I want to know what the trigger is for the next hike. We know she's given the reasons for this, quite reasonably, I'd say, because of where we're seeing inflation. I mean, I think inflation expectations are the important thing, as we've discussed, more so than what we're seeing in terms of second round effects at the moment. Eric, what would you want to ask her if you've got the opportunity? If you beat Bloomberg and Reuters to the punch, for example?
Well, I don't think you can go directly at her anymore because I think she's figured out that she can't just say what she thinks. I
Mm,
think she's probably had her ear boxed in more than once in the governing council. But I would say, how far do you think the bank is from a good place right now?
okay.
And what will it take the bank to get there if this war continues?
Yeah, fair enough. Um, but we expect it to be guarded. We expect sources. We love the sources stories that come out afterwards. I find them quite infuriating because at a central bank press conference, you should really try and convey to the public what you actually have said and mean. Anyway, but the sources stories will probably come out there. Do you expect, Carsten, a unanimous decision on not only today but the potential messaging they might ask her to give? Or
I
do you think it's
think
too?
is Yeah, listen, Harry, I think that's also the trick the ECB has learned recently to present a decision as a unanimous decision, but then, and that was no, but then still talk about opposing views. And then that is actually what happened at the last meeting when the decision was to stay on hold.
Mm,
According to Lagarde, it was a unanimous decision. But then, unasked, Lagarde said that there were a couple of ECB members already actually having a discussion or asking for a rate hike.
mm,
So I think, and so yes, unanimously, because I think the ECB has, and that's also one of the successes of Lagarde. The ECB tries to speak with one voice much more and much better than in the past. So they want to give the impression that there are not there are no in-house fights. So therefore, it's going to be a unanimous decision. And the only question is whether people already opting for a 50 basis point rate hike, and whether also people opting in the discussion for staying on hold. The funny thing, final word, the funny thing in the minutes of the last meeting was because then you always get a bit more in-depth information. The minutes said that some ECB members would have been in favor of a rate hike had it been on the agenda. So
okay.
that is also a very interesting formulation because and well, maybe you might want to ask today whether a staying on hold was also on the agenda, or
Yeah.
whether it was only a 25 basis point rate hike that was on the agenda.
I think that would be a far more revealing question, if I'm honest, if who voted for a hold. If any, was that, yeah, like you say, on the agenda. We're wrapping up the episode now, but I want to get your just opinion while I've got you today. And as I said, I'm very happy that you've and honoured that you come on. What do you think how would you label her tenure as ECB president? Would you put it down as one of the better central bankers um, of the ECB? How would you view her tenure?
Well, let's at least hope that her tenure will at least only end after 8 years, and not earlier,
Mm,
like we probably had suspected half a year ago.
yeah.
A lot of ups and downs, or probably rather downs and ups. So the start was clearly not good. Also think that Lagarde started off hoping that this was about green monetary policy, all kind of other stuff, but not hardcore monetary policy and inflation coming back.
Mm,
Remember, in the first year, actually the first month, when the pandemic started, there was pressure on her whether she was willing to also keep spreads in bond markets stable, and she refused to do so. So I think she really had to learn the hard way that being the president of the European Central Bank, or a central bank in general, really requires you to stick to the script. And it can be boring for a former politician, so do not improvise at press conferences, but stick to the script. So that, and then that was the hard lesson. It took really a couple of years, in all honesty. But when you look at the performances now over the last 2 years, very decent, very good. So we have returned to a kind of matter of factness, and what Lagarde has also achieved is, she has become the moderator at the ECB. And many people, including myself at the start, so we were I was a big supporter of Draghi. I really loved Mario Draghi, and of course looking at Mario Draghi as the big maestro, the mastermind behind the ECB's monetary policy. Well, Christine Lagarde is not the mastermind behind everything that's happening, and it took all the ECB watchers a while to get used to that. But what Christine Lagarde has achieved is that there apparently is a better discussion within the governing council, that decisions are made more unanimously than in the past, and that we do not end up, and Eric will remember this in the past, in the very past, in the very distant past, we had situations in which very often a German central banker just spoke 1 hour after the ECB president had talked to the press in order to give his own views on what has just happened. And that was obviously horrible for for the ECB's reputation, for giving guidance to financial markets. And we are talking about a good place, I think, in terms of giving guidance to markets, at least short-term guidance. The ECB is now in a much better shape, thanks to Christine Lagarde.
Excellent. On that note, then, I'd like to thank you, Carsten Brzeski of ING, for appearing on today's episode. It's been very enlightening for me. Thank you very much.
My pleasure.
Awesome. Eric, thank you. For anyone who wants to have a read through of the ECB rate decision, please go to the website, livesquawk.com. Obviously, we'll put up ING research as well. You can have a look at some of their research and thinking on today's decision and beyond. The ECB rate decision itself is due today then at 12:15 GMT, 14:15 CET, if I got that right, haven't I? Yes. With the press conference 30 minutes thereafter. So again, tune into LiveSquawk if you want to hear the rate announcement. Everyone's pretty much stuck on, well, it is unanimous. We're going to get a 25 basis point hike today. And beyond that, we'll be listening keenly to see if they signal anything or any questions come about, whether they go again before the end of this summer or even into the autumn. So again, thank you all for listening. Thank you to Carsten. Thank you to Eric. And we'll see you again very soon.